Hi, this is Kevin from StockTA. Please join me as I take on the challenge of finding smart ways to profit during this next wave of inflation. If you look at recent history, inflation comes in waves, and we're due for another wave. And if you look at some popular metrics used to monitor inflation and the Fed, they should have raised another 25 basis points or not done anything at their last meeting. Instead, they cut because the Fed has become politicized, they are no longer independent, and they need to help keep the US government solvent. Because of that and some other geopolitical events going on around the globe, yields continue to rise along with mortgage rates, and inflation could rise along with them. In this video, I wanted to share some tips on how to profit off the return of inflation. Using our website, stockta.com, to evaluate signal strength, we found a few interesting investment opportunities. And as a reminder, this is not investment advice. I'm not a licensed financial professional, so please consult one before investing any of your hard-earned money into these crazy markets. An easy way to play inflation is the ETF INFL. INFL has a lot of exposure to royalty companies that have great business models during times of inflation. Their costs stay fixed and they get to capture the upsides of rising commodity prices during a stagflationary or inflationary period, which I believe is what we're going through now. It's up 26% year to date and has further tailwinds behind it. Oil remains below $70, which it cannot stay below for long if you watched some of my previous videos. And this ETF has a lot of exposure to energy. If you look at this chart of INFL, we can see that it's very bullish overall, bullish short term, closed at almost 39.59, has some slight resistance at 39.78, more slight resistance at 40.16, more slight resistance at 40.58. Has medium support 38.42, 37.43, 36.24. So this is a very steady chart. It's not stretched, has a lot of good support, has been rising all year, and has other indicators that are very bullish. This is one of my favorite ETFs, and I've been in and out of it all year, and it does very well during times of inflation. Let's look at, this is one of the holdings of INFL. This is Texas Pacific Land Trust, has broken out. They have a lot of land, have royalties and mineral rights on, oil properties, whether in the Permian or other shale basins. I think they have some in the Bakken too. And they've exploded this year. They've done really, really well. VNOM is one of my favorite energy plays, bullish across the board, has some good support. It closed at 52.16, has some good support at 51.72, 48.79, 47.64. It's had a great year. I think it doubled from January till now. Has good volume. Like, it's just one of my favorite stocks. I think this was trading at like $10 during COVID or right after it. And thankfully I've discovered it and been in and out of it ever since. WPM, Wheat and Precious Metals, has a lot of exposure to silver, their royalty model. Bullish overall, neutral short term. They pulled back a little bit this week. Medium support at 64.31, at 62.39, not much for overhead resistance. Chart could be consolidating here. With the election coming up, there's some uncertainty. So this could be a good one to keep an eye on when the dust settles from the election. Franco-Nevada, one of the most profitable companies in the world. I think they have like 5 or 6 full-time employees and they generate billions in revenue every year, or hundreds of millions in revenue every year. Um, Pulled back a little bit, neutral right now. They do have some exposure to energy and copper, and both those have been kind of under siege lately. But there has not been any heavy resistance overhead. So I think, the chart's a little stretched. There's not much for support until you get down to the 125 area. Um, but that's not terrible considering how much the stock has run up during the course of the year and how well the royalty model has worked out for them. This is Prairie Sky. They're a Canadian royalty company. They have a lot of mineral rights, a lot of land rights. Neutral overall, bearish short term, is very thinly traded. About 20,000 in volume. That's why you get these candles that are very weird. Closed at 19.5, has some medium resistance at 20.18. So I don't own any of this right now. And again, it's very tightly held, so it can be tough to trade. When I enter this, I look for, big support numbers, breaking out to the upside, and then you ride it up and sell into volume instead of, trying to buy in or sell when there's not a lot of interest at the time. Want to talk about tech here real quick. During inflationary times, tech companies can come under siege, not do as well. Tech had a rough close to the week, and a lot of these companies went from bullish to neutral trend, both overall and short term. If you look at Microsoft's closed at 410, has medium resistance at 418. That's a new number that just showed up this week, and also there's not much for support. Um, so again, this could be an indicator. Some of the bigger institutions could be starting to rotate out of tech, and start looking at other, spaces, whether that's more defensive. You've seen utilities do well. It could be more towards precious metals or the royalty plays like I was just talking about. And then Apple also lost signal strength this week down to neutral, closed a little under 223. You see heavy resistance 227.74. That just popped up this week. Has medium support at 216.95. But for a while, the chart was chugging along, and it's recently lost some signal strength. XLK, which is a tech ETF, neutral across the board. That also had a rough close to the week, closed at 223.91. Some medium to heavy resistance at 227.54. Also, not much for support. These are all small support numbers. So I just wanted to show how, inflation-based assets have been doing well lately, and tech has not been doing well. And this could be for a variety of reasons, but after the election dust settles, I'm going to keep a close eye on INFL, to see how it reacts, post-election. Um, just to recap, I think the key is to be proactive and adjust your strategy according to the economic environment, whether it's rebalancing your portfolio or shifting your spending habits. The most important thing to do is stay informed, and keep an eye out for, right now inflation is somewhat under control, but oil prices have been sub 70, sub 75 for a while. If oil spikes for whatever reason and starts creeping back up to that 85, 90 level, inflation's going to rise with it. So main takeaway from this, inflation might seem scary, but with the right strategy, you can not only navigate it, but you can profit from it by understanding how inflation affects different sectors. By making smart investment choices, you can come out on top even in uncertain economic times. Remember, knowledge is power, and in this case, the key to protecting your wealth and securing your financial future. Please visit StockTA.com to use our stock screener and check out some of these stocks that I mentioned today. Thank you for watching, and I'd love to hear from you about your experiences with inflation in the comments below, or any other investment ideas that you've traded in the past during inflationary times that I didn't mention. And please check out my other videos on YouTube.